Hello, I'll make this video for you guys. Just one more video of explaining how we read the market, because it's very very important, and you have to pay a good attention to what I will say in this video. Pause it, watch it again. Of course, at least two times. At least two times. This is very important because we have to understand perfectly how to read the market. So let's start with this, for example, USD CAD. Let's take this off so you do not get confused. So, weekly time frame. What I want you to do every time that you start analyzing the market, first things first, when it comes to weekly, you don't have to go and start from here. As you can see here, it's Monday, 17th of June, 2024. That's way back. That's 1 year back. We don't need that information. You can just start with the latest price action. You can start from up here, which is February 2025. So every time, this is mandatory. Every time, just start, take your tools and draw exactly where the body stops. Remember, when the body closes, not the wicks. You have to be very careful with that. So you take it off, and then you see what do we have here. Starting lower high, lower low, price pushing up, pushing under the lower low, which means that now we have a new lower low, and the last elbow, the last push was from that lower high. So now that becomes lower high. Then another push up and push down, which means another lower low and another lower high. Now to this one, as you can see, the price never closed under, so we don't have a new lower low. If the price doesn't close, we don't have a new lower low, or if the price doesn't go above the previous lower high, we don't have a new or a break of structure. You have to understand that if price stays here, does not matter what it does, this is the lower high and this is the lower low. So all that here is just pure price action. Like that has to be inside. Or everything inside that box is price action. We don't care. And also, very, very important, remember that if the price does that one and breaks under the lower, wait, the lower high now is not this one, because this one, the push never went under the lower low. Gave us another elbow, and that push went under the lower low. So that one is the lower high. The lower high is the last low high before the break of the lower low here. It's very important because sometimes you get confused, like if the price breaks here, which is the highest one, this one. No, because the push came from that elbow here. So it's very important. It's the last lower high before the push. That one, the push that happened from this lower high, stopped here, didn't close below. The push from this lower high, though, closed below. So this is the new lower high and this is the new lower low. And again, if price does this and here, and then this and here, that here is nothing because the push from that elbow stopped before it closed below that, while this one create the push that make another lower low. So this is the new lower high. Okay, that's very very important, so you don't get confused. It's the last. Write this down. Write down what I'm saying. It's the last to create a lower low. and find the lower high. It's the last lower high before the push. The lower low creates when you break the previous lower low, and it's the lowest point on the chart, and the lower high is the last elbow or like corner, however you want to phrase it, it's easier for you, before you create the push. You have to understand that it doesn't matter how many elbows we have, it's the one before you get the push that broke under the lower low. So write this down, pause it, watch it again. It's very, very important. So this market, it's bearish, the weekly time frame. We move on to the daily. And on the daily now, again, don't start in drawing from here. This is the starting of the year. It's a daily time frame. It's every single day. So start from here, like or here. Like it doesn't have to take so much time of your like. What's wrong? Take your tool and start. This one. Slowly zoom it in. Like now I'm doing it faster because I've done this a million times, but you can just do it slowly and find the elbows. That's the most important thing. Don't come to the chart and think, oh, that's an elbow. Oh, that's an elbow. Like elbow is whatever the price is doing, like this, the curve, like and fast turn, like goes like this, turn. You see, like it goes like this, turn. It goes like this, turn, like it's a sharp edge. So that's an elbow. Try to adjust it there so you can find the. And then after you finish, grab it from the body and drag it out. And you can see even you can see that even that here is not necessary. You don't need that. But let's say you did it. Here it becomes bullish again, and now here it becomes breaks the lower high, becomes bullish. And again, the push here breaks under, so it's bearish. So we have lower low, lower high. Push up, push down. It means that this is the lower high because the push that break the lower low came from that elbow here. Then push up, push down, break another elbow, lower low, lower high, and then here it's nothing. As you can see here, after the break, that push came up. So now what does that mean? It means that we broke the structure and now it's a higher low and a higher high. We're in a bullish market. And here, this is nothing. It's just price action because here is the higher low again and the higher high, and the price just plays. And remember, when this happens, and if that happens and that happens, the new higher low is not this one because this is exactly the same rule as the lower high. The higher low is the last elbow low before the push that broke the structure or continued to making new higher highs. Like this one, as you can see, didn't break any structure, didn't continue to be bullish. While this elbow here gave us the push. So this is the higher low and this is the new higher high. Higher highs and lower lows are the easiest because higher high is the highest point in the chart at the moment, and lower low is the lowest point in the chart at the moment. So the hard part to understand is the lower low and the higher low, and the lower high. I'm sorry, the lower high and the higher low. It's the last elbow before the push up or down. It's the last elbow that broke, not just was there. So again, now this is a bullish market. As you can see, nothing broke up above or under. And then we move on to the 4 hour. 4 hour again, don't go so back. This is 28th of May. It's 4 hours. Every single candle represents 4 hours. So take it as from here. You don't need that much. Take it carefully, find the elbows. That one here, yes, elbow, take it, take it, take it, take it. Careful, do it slowly and carefully. And then that's it. Take it out. See, even that now it's like way too much. Like look how much price action that we don't actually need. As we can see here, it was berries. Here, perfect example. Lower high, lower low. Okay, push up. The push down wasn't strong enough to continue making lower low. So that here it's nothing. We still have this as a lower high and this as a lower low. Another push up and then that push was a strong push. So that one now becomes the lower high. Not this one, because this push didn't have power to break under. But this one, this elbow gave the strong push, and this is the lower low. And again, another lower high, lower low, and then break above, break the structure. It's bullish. Have higher low, higher high. Push up, down, that closes up, higher high, higher low. Then that comes here. Nothing. See this elbow here gave us a push that didn't break above this one. So that push down and that push up gave us the break. So this is the higher low and this is the new higher high. Not this one. This elbow wasn't strong enough to push the price up to break this higher high. So but this elbow had the power to break this higher high. So this is the higher low and this is the higher high. So we have, as you can see, bullish time, bullish the 4 hour. So we have weekly berries, and I want you to go and see also the chart weekly bearish, daily bullish, 4 hour bullish. So that's what I want you to do. Watch this video 2-3 times, watch it carefully, watch it again and again and again, and then watch it again and again and again carefully. Pay attention to what I've said, write down, pay very like be so careful of the video, because in the next classroom we're gonna do some examples. I hope you understand it. If you don't, it's okay, we will do it again, but it would be nice if you get the point, and then we move on to do other things in the strategy and get into more like trading stuff. That's also trading stuff. That's very, yeah, I told you in the beginning that looks so easy, but you can see how hard it is. It's so easy and simple, but at the same time, it's so hard. And it's also the most important thing. It's the foundation. Without that, I cannot teach you the strategy. If you don't know how to read the market properly, I cannot teach you the strategy, because you won't have the good entry. You won't understand nothing. So it's very, very important. Watch it 2 times at least. Pause it. Write down. Read it again, and then I will let you know when we have a class. Thank you for watching. See you.